Hey there, Brian D'Amico here from VectorVest, and today we're going to look at 7 keys to take control of your investing this year. One of the most popular New Year's resolutions is to fix your financial situation by saving more and spending less. Well, there's 2 problems with that. First, interest rates are low, and the Fed has no intention to raise them anytime soon. Therefore, you get virtually no return in any interest-bearing device, and when you consider inflation, you're actually losing money. Second, as you get older, your expenses tend to go up, making it hard to spend less without changing your lifestyle. Here at VectorVest, we feel you have an alternative, and that is to become a better investor. That's why tonight, we're going to look at 7 keys to take control of your investing this year. Let's get to it. Key number 1 is draw a line in the sand. You need to have a point where enough is enough. And if the stock's price crosses it, alarms start to go off and you're out. It's like when the police set up the tape that says do not cross. Everyone knows not to cross that line. If they see someone cross the line, many alarms start to go off in their heads and they take action. Not only is this the first key, it's the very first thing you should do, and I mean immediately. Take a look at every stock you currently own. And if you don't know when you will exit that position, that's the first thing you should decide. If you don't have an exit plan, it's like jumping out of a plane without a parachute. You make it a habit of watching winning trades turn into losers, and you tend to hold on to losing trades too long, saying things like, I'll just give it one more day. Here are 3 simple tips to help you draw your line in the sand. Tip number 1 is follow the give back half rule. Any stock in your portfolio with a gain of 10% or more, your line in the sand should be halfway between where you bought it and the highest point it reached. That way you lock in half your gains. Here's what that looks like. Let's say you purchased it here. The highest point it reached since then is here. You should set your line in the sand here, halfway between. If the stock falls and hits this line, you close the position and lock in those profits. Tip number 2 is use the VectorVest stop price. VectorVest calculates a stop price for each stock every day. It combines price movement along with company fundamentals to determine when to exit a position. Tip number 3 is if a stock in your portfolio is already below the VectorVest stop, you can either decide to just sell it or draw your line in the sand below a recent pivot low. Here you see an example of what that looks like. That's where you're saying enough is enough. Drawing your line in the sand for each stock you own is integral to taking control of your investing. Now that you've done that, you can move on to key number 2. Key number 2 is stop buying bad stocks. If you continue to buy bad stocks, all you'll be doing is managing bad stocks all year long. Well, what's a bad stock? A bad stock is one that has negative and/or falling earnings, top left to bottom right price movement, high volatility, and that means movements of the stock's price that you can't or just don't want to handle. Here's a few examples. Here you see negative and falling EPS. The price is in a clear downtrend. This one's got falling EPS, even though it's positive. It's got high volatility in the stock's price. Here again, negative and falling EPS, and the price is in a clear downtrend. And here are a few more. If you find that you're buying stocks like this, you should stop. Can these stocks increase in price? Sure. But the volatility may be more than you can handle, and the probability that they will increase is lower than other good stocks, which we'll look at now. Key number 3 is to start buying good stocks. Just like your body would be a lot healthier if you ate fresh, healthy food, your portfolio will be healthier if you bought good, safe stocks. A lot of people make the mistake and buy stocks just because the companies are well known or because they are talked about by the gurus on TV. Well, here at VectorVest, we like to deal in facts, not hype. We look at the fundamental and technical data for each company and calculate indicators such as relative value, relative safety, and relative timing, and we rank the stocks for you. So the best combination is at the top. Every day, you have an unbiased evaluation of stocks. We tell our prudent investors to focus on stocks with relative value and relative safety over 1. That way you know you're dealing with a fundamentally sound company. You should only buy stocks in uptrends. One way to easily tell that is to look at the relative timing indicator and make sure it's above 1. Once you graph the stocks, simply look for a smooth and steady price chart and rising earnings. Buying these fundamentally sound companies with smooth price charts will become even more important when we get to key number 5. So stay tuned for that. Key number 4 is to buy only when the market is in an uptrend. It's not always a good time to buy. There's a time to buy and a time not to buy. You only want to buy when the market is in an uptrend. Without getting into all the fine details, here at VectorVest, we simply look for a green light in the price column of the color guard. That tells us the market's in an uptrend. Once we get that green light, if the market continues higher the next day, that tells us it's safe to enter the market. Here you can see the market over time. And what I'll do is I'm going to overlay our green lights onto this graph. Notice that when the market is rising, that's when you see the green lights. When the market is falling, you don't get green lights. And the same is true throughout history. When the market's going up, that's when you see green lights. When the market is falling, you don't get green lights. You need to make sure you only buy when the market is rising, and these green lights are a great daily indication to help you. Key number 5 is to give your stocks room to breathe. Just like with teenagers. I have 2 teenagers at home, so I can speak to this. The tighter the rules and restrictions, the more you find you're managing them, and the more they'll tend to act out. That doesn't mean you have no rules, but you set reasonable rules and give them enough space. The same is true with your stocks. Remember earlier, you were buying good, safe stocks that had smooth and steady chart patterns with rising earnings. Typically, those stocks move higher over time, especially during market uptrends. So you want to give them room to breathe. A great way to do that would be to use the VectorVest stop price. Here you see an example. Notice how the VectorVest stop price gives the stock enough room to do its normal movements and allows it to go higher. Keep in mind, we're not talking about swing trading or day trading here. We're talking about fixing your investing. These trades are going to be position trades that will be in your portfolio for several weeks to months. Stocks don't go up in a straight line. They'll have up days and down days. You don't want to set your stops so tight that you get kicked out on normal trading action. You'll find you're getting in and out of trades frequently. So give your stocks room to breathe. Key number 6 is to size your position. Don't invest too much into any one position so that if it goes against you, it dramatically hurts your portfolio. You can have the best stop price and exit criteria in the world, but if you invest too much money in the stock, you're going to fail for 2 reasons. First, if a trade starts to go against you, you might close it before it hits your stop because you see you're losing too much money because you had too much money invested in that position. Second, if you let the stock fall and hit your stop price, the amount of money you lose is too much. If either of those happen, you typically give up on the system and you say it doesn't work. Here are a couple position sizing guidelines for you. First, we typically say to invest an equal dollar amount in each position in your portfolio. For example, if you have $100,000 and you want to trade 10 stocks, you would try to maintain $10,000 in each position. Second, only risk losing between 1 to 2% of your total portfolio on each trade. If you're using the VectorVest stop price with a 10-stock portfolio that's equally dollar weighted, you'll notice if a trade goes against you, the risk is typically between 1 and 2% of your total portfolio. Key number 7 is to be patient and stick with it. Many investors get impatient with a new system. They don't see big gains right away, or they have a losing trade, and they give up and move on to the next trading system. The keys we talked about today focus on helping you become a better investor, which means it's a long-term game you're playing. You need to give any good system that has a historical track record of working, you need to give that system a good year to practice and get good at it. Keep in mind, you're retraining your investing brain, possibly breaking years of bad habits. It'll all be worth it in the end. Once you stop buying bad stocks, start getting rid of the bad stocks you already have, and replacing them with good ones, you'll start to see your portfolio grow over time. Be patient with it. Today, we looked at 7 keys to take control of your investing this year. If you feel you need help implementing anything we talked about today, stick around and I'll tell you about a course for which we just opened up registration. All right, if you're still with me, that means you want to hear more about the course I just mentioned. If you need help implementing what we talked about today, you should register for our full Successful Investor course. You might already be aware of our Quick Start course that's built into VectorVest. If not, it's found on the Training tab, and as the name implies, it gets you up to speed very quickly on the concepts of investing successfully. After creating that Quick Start course and coaching clients weekly, my fellow coach, Todd Schaefer, and I knew we had to create a more in-depth step-by-step course. So we got together with Dr. DeLito, founder of VectorVest, and developed the Successful Investor course, 6 Weeks to Steady Growth. It's designed to take you step-by-step through the system that you need to safely and steadily grow your portfolio. If you think about it this way, our Quick Start course does a great job of highlighting the main concepts of when to buy, what to buy, and when to sell. The full Successful Investor course takes each section and dives deep. While maintaining a laser focus on becoming a successful investor, we teach you everything you need to do step by step. From the very beginning, you'll be very clear on the overall game plan. You'll know exactly when to buy for both the overall market and for individual stocks. You'll know exactly what to buy and how to find those stocks to fill your portfolio. You'll know exactly when to sell, whether you're locking in profits or minimizing losses. You'll know exactly how to set up your trades and manage your portfolio. And you'll know exactly how to place your trades with a broker, both to enter the trade and to exit the trade. Here's what a few students had to say after they took the course. John said, "It will help you make better trades, reduce your losses, and earn more profits with less time." Lucine said, "Just do it. The benefits are unbelievable on so many levels, financially, emotionally, and psychologically." Richie said, "I've taken several other investment courses, and this one is among the easiest to implement and stay on track." Robert said, "It's an excellent course and well worth the money, and likely earn enough in your first trades to pay for the course." Danny said, "Take the course and follow what it tells you. You will not regret it if you are serious about being successful." The course normally sells for $495 throughout the year, but not today. Today and for the next few days, we've reduced the price and added a bunch of bonuses. The price is only $295. The reduced price and all the extra bonuses are currently available, but won't be available much longer. To get yourself registered, go to www.vectorvest.com/TSIC. While you're there, you can get more information about the course and hear about all of the bonuses that are currently available. Again, go to www.vectorvest.com/TSIC and get yourself registered before registration closes. And let's make this year the year that you turn your portfolio around. On behalf of everyone here at VectorVest, thank you for watching, and we look forward to seeing you in class.